The ECB's deposit rate is staying at 4%, the refinancing rate at 4.5%. All in all, though, what we're hearing from the ECB at this stage is confirming what the markets were expecting, and that is no change in terms of the deposit rate, still at that historic high of 4%. But of course, a lot of question marks about when the ECB will be changing these rates. Market expectations suggest there's a 70% chance that we'll see that move happening in June. And then what could happen after that? So a lot of question marks for Christine Lagarde today in terms of whether they will be able to give any sort of guidance really about what will happen in the future, what sort of path we'll be looking at in terms of potential rate cuts. Now, in terms of other commentary that we're getting from the ECB, they're saying when it comes to the reinvestments and their PEP, they are still on track to end them in 2024. So no changes in there. In terms of their commentary around interest rates, they're saying, once again, repeating the levels that we were looking at ahead of this meeting and reiterating that very important point, data dependent. ECB says, in any event, the ECB will continue to follow a data dependent and meeting by meeting approach to determining appropriate level and duration of restriction. So they are not pre-committing to any sort of rate path at this stage. This message from the ECB, Andrew, is very much in line with what we were expecting. So what is the main question mark that you have at this stage for the press conference, given that the statement at this stage is not giving us anything new?
Well, I think there is an explicit aim in this statement to keep the focus on the data for Europe. And maybe looking ahead to the press conference, I think the main thing to look for will be, President Lagarde's own response to that question of what is the potential sensitivity of ECB policy to US data and to the Fed, where my own sense would be she'll be reluctant to give much of an explicit steer beyond saying what is in this statement, which is one of data dependence and to try and keep the focus on European data. Now, I think consistent with that, there's implicitly in this statement some level of comfort with what the market has been recently pricing and is still pricing for the prospect of rate cuts for this year and a little beyond.
Data dependent, that's their message so far. I just wanted to clarify, when it comes to the data, obviously they're tracking wage negotiations quite closely. But between now and June, what sort of data will matter for the ECB to be in that position to announce a rate cut?
Well, there's probably two key elements. One is the wage data that you mentioned, including on wage settlements and the negotiated wage settlement series that the ECB tracks. And then beyond that, the monthly CPI prints, including services prices that have been quite sticky for the past 5 or so months. There, it's possible that some of that stickiness in services prices was exaggerated in the flash March data by the earlier timing of Easter. So that's one thing that they'll be looking for, whether that subsides between now and June, to confirm the prospect of a June rate cut.
Let's see, it's definitely fascinating times. There's a lot to keep in mind.